In today's video, I'm going to walk you through a company's balance sheet, and I'm going to ask 4 very important questions about its assets. More specifically, cash, inventory, accounts receivable, property, plant, and equipment. And so here's a quick breakdown of the things that we're going to cover today. So first, I'm going to show you the questions that you should be asking. Second, I'll tell you what support you'll need in order for you to answer these questions. And then third, I'll show you what you need to do in order to validate this support. And then finally, and most importantly, a conclusion. I'll show you how to draw a conclusion based on this information. And a quick example of what I mean by these questions is that let's assume the company has $10 million of cash sitting on the balance sheet. So in this case, the company has cash and cash equivalent of $10 million at the end of the year. Then my question will be, does the company have sufficient cash on hand to pay its bills? More specifically, if the company is not profitable yet, how much cash runway does it have? And that will lead us to calculate the cash runway for the business. In this case, it will lead us to 3.5 years. And that will tell me that the company has 3.5 years to break even. Then it will be faced either with a decision to raise money or go out of business. And this template here can be downloaded on Patreon along with all of the templates that I use on my videos. If you become a supporter on Patreon, I'll leave a link down below for the website. Thank you so much for your support. And if you're new to the channel, welcome. My name is Bill Hanna. I'm the financial controller. I'm a licensed CPA in the great state of New York. And in this channel, we talk about all things related to accounting, finance, fraud cases, financial statement analysis. So if you haven't already, go ahead and subscribe down below. So we're looking at the balance sheet for a company, Crab Cake Inc. And this is a frozen food manufacturer, and the manufacturer crab cakes. And this is the combination of crab meat and cake, crab cake. Very delicious, right? So this is the balance sheet as of December 31st, 2020. And the first thing to look at is to scroll down to the total assets line and look at total assets. In this case, it's $23,500,000. Make sure that it equals the other side, which is total liabilities and equity, also $23,500,000. Hence the imbalance. It has to balance. And if it doesn't equal, you send it right back because we ain't got no time to analyze a balance sheet that doesn't balance, right? So this is the first thing you look at. Now, let's take a look at the questions that I'm going to be asking about each of these line items on the asset side. So for cash and cash equivalent, the first question that comes to mind about cash is that does the company have sufficient cash on hand to pay its bills? And more specifically, like I said, if the company is not profitable yet. So the first thing you got to do is look for the support. What is my support here? So my support will be analyzing the net income, less depreciation, and non-cash items to determine cash runway. So that's the first thing I gotta do is to look at the net income on the income statement. So when I look at the income statement for Crab Cake Inc., I realize right out of the gate that they have a net loss of $3.6 million. So what I need to do is do the annual cash burn by taking the amount of net loss and add back depreciation, because depreciation is the item here that is not related to cash. And that will give me an annual cash burn of $2.8 million. And that's going to be an important number because we're going to talk about that next. So how do I validate, or how do I gain comfort over my question? Well, the only way will be is to calculate the cash runway. And that's by taking the cash balance, dividing it by the burn rate. And we just said that the annual burn rate is $2.8 million. So the cash runway is going to be $10 million cash balance divided by burn rate, 2.8 million. That will give us 3.5 years. And that, for me, as a conclusion to this question, what it means is that the company has 3.5 years to break even. Then it will have either to raise funds or will be forced to go out of business. And so that's the only way to gain comfort over the cash balance is if the company is losing money, is to understand how much cash runway it has in order to reach break even. My next question is going to be on accounts receivable, and the company has a balance of $7 million. And the question that I have around AR is going to be, does the company have collection issues? Because you could have a balance on your AR and you're unable to collect it. You have customers that are not paying you, or they're late on paying you, and you keep emailing them and nobody's paying. And so you need to look at the collection issues. And the way to approach this kind of question is to calculate DSO, or days sales outstanding. So DSO, or days sales outstanding, measures the amount of time that it takes the company to convert its sales into cash. And that talks about the company's efficiency and ability to collect its AR from customers. And it's a very important metric to measure the company's efficiency. And that's why I talk a lot about it in my online course on KPIs of financial metrics, along a dozen other KPIs of financial metrics. Go ahead and check it out. I'm going to leave a link down below. But in this case, you need to calculate DSO, and the way to do it is to take accounts receivable divided by credit sales and multiply that by the number of days in the period, or in this case, in the year. When you do that for Crab Cake Inc., you'll end up with these results. So you'll end up with $7 million in AR divided by 44 million in credit sales multiplied by 365 days in a year. You get 58 days. And what you do with that is you compare it to the industry average. So you got to look at the industry average, and in this case, you can head over to a website like Ready Ratios, and this website shows you the benchmark by industry, and you can find this website easily by googling DSO, or day sales outstanding by industry, and in here you'll find all of the different industries and by year broken down by day sales outstanding averages. You can even filter here on median or average, but we'll leave it on median because that's recommended. And when we look for the industry that we're in, so for example, we are in the food business, you'll find here this food category. When you click on it, you can actually find more ratios. So you can find a host of other ratios benchmarked by industry. And then when we get to the accounts receivable turnover, it's 34 days. So when we look back in our example, that was 58 days. So 58 days tells me that we have some collection issues, and that's the conclusion I'm going to reach here. When I look at this, I'm going to look at 58 days, and I'm going to say, compare the results to industry median, and then it looks like this company might have collection issues, not collecting on time from customers, or maybe not negotiating the right terms when they negotiate an agreement with a customer in terms of how long the customer will take to pay the company for AR. So how am I doing so far? I hope that you're learning tons and tons from this. And if you like this work, I think you're going to love my online courses in financial analysis. I'm going to leave links down below in the description, so go ahead and check it out. And now let's get back to it. My next question is going to be around inventory, and the company has an inventory balance of $3 million. And the question I'm going to have is around inventory. Is there any stale inventory in the books? Is that when you look at the $3 million, how much of that is actual inventory that the company can sell versus maybe expired good? In this case, this company is selling frozen food. It might have some expired inventory. And so the support I'm going to be asking for in this case is an aging report. So an inventory aging schedule that shows me the breakdown of how old is this inventory. Is it less than a year old? Is it more than a year old? And then I can make a determination by looking at that and understand the breakdown. And so check for expired lots of food. And if there is a expired lot of food, basically it needs to be written off or eliminated from the balance on the balance sheet. And the conclusion I'm going to reach out of that is that if you have a balance, if you have any percentage of inventory either expired or unknown, for example, if you don't know the expiration date, then there is a high risk that the balance on the balance sheet is inflated and an adjustment might be needed to bring down the balance to the accurate amount. And by the way, if you have any tips on what other things to ask about the asset section, let me know in the comment section below. Let me know what you think, what questions I should be asking about these balances. My next question is going to be on property, plant, and equipment, and the company has a balance of $3.5 million. And the risk here is going to be the risk of obsolescence. And so my question is going to be, are there any obsolete equipment? And the way to validate this is to ask for a fixed asset ledger showing the purchase date and the net book value, as well as the cost of the asset. And so you can take a look at this and then you can validate. You can ask questions like checking for large items and inquiring whether they are in use or no intention to use them in the future, which will render them obsolete. And so are there any large balances that are not being used by the company? And the conclusion on that, if you find any big balances, any percentage of PP&E that is not in use and might be rendered obsolete, there is a high risk that the balance sheet is inflated and adjustment might need to be made to bring the balance down to the correct amount. So this is it for today on the asset section on the balance sheet. In the next video, we'll be discussing questions to ask on the liabilities and owner's equity section on the balance sheet. If you like the video, give it a big thumbs up, and I'll see you in the next one.